Today, I'll be sharing my 5 streams of passive income from the month of March and exactly how much each one made me. Stay tuned until the end because I'll also tell y'all about the huge financial mistake I made in March that literally gave me nightmares. First things first, what is passive income? Passive income is money that requires little or no energy to earn it once the initial effort has been put forward. This can include money from bank account interest, filling out surveys, or even something more capital intensive like real estate rentals. People say it takes money to make money, and to an extent that is true. All of the following passive income sources that I'm going to discuss today require you to have some money you can save, invest, and/or spend. And some of these involve risk as well, but I do want to stress that you by no means have to be wealthy in order to generate passive income. Even if your passive income is 20 cents at the end of the month, that's still money you didn't have to work as hard for, or money that you were able to earn on your own terms. What are my passive income sources? Oh, it's funny you asked. My first passive income source is the interest from the money I have sitting in the bank. The FDIC and NCUA are the two federal agencies that insure deposits at U.S. banks and credit unions, respectively. There are a number of ways that you can earn interest on your money that's held in a federally insured account. I previously had a CD and a money market account, but for right now, I'm focusing on interest-bearing checking and a high-yield savings account. My high-yield savings account currently has a 0.40% annual percentage yield, and that is compounded monthly. During the month of March, this equated to $5.85 in interest. My next passive income source for the month of March was a sign-up bonus from opening a new checking account. My credit card company was running a promotion where you receive $200 for opening a new checking account if you didn't already have one with them. To receive the bonus, you had to make a one-time deposit of $500 via direct deposit within 90 days of opening the account. It's important to note that the checking account also has a monthly service fee. While those fees are annoying, they're also avoidable. I set up my direct deposit at work to send $500 to this account on a monthly basis, and that allows me to avoid the fee. Lastly, I have to keep the account open for at least 6 months, or I have to forfeit the promotion bonus at the time of account closure. This is my third time doing something like this with a company I already bank with. However, you don't have to wait for your bank to offer this. You can Google something like bank account promo and find websites that aggregate what promotions are currently available. Whenever you work with any kind of financial services company, you'll want to make sure you're doing your due diligence. Research if it's a bank you're comfortable with and whether their services can meet your needs. Everyone's financial situation is different, and some people interact with their banks in different ways. Things you may want to consider are monthly service fees, ATM fees, as well as the availability of ATMs or physical branches in your area. For people that use debit cards more heavily, it probably makes sense to double check the fees for international purchases and the bank's overdraft policies. Now that I've talked about the passive income you can make from saving your money, let's talk about how you can make money from spending. That's right, my third passive income source is from cashback rewards for spending money, mostly through my credit cards. I have 2 cards. One is a cashback card, and the other uses points, which can be redeemed for cash or other offers. Both cards have other benefits like complimentary food delivery fees and discounted gift cards that I also like to take advantage of. In any case, during March, I earned the equivalent of $22.13 from credit card spending. Dividends from my investment portfolio represent my 4th stream of passive income. Dividends are payment a company makes to distribute its profit amongst its shareholders. They are often paid quarterly, and since March marks the end of the first quarter of 2021, I received a nice chunk of change in dividends, totaling $468.75. If you're interested in learning more about my March dividends, check out the video linked above to get the lowdown. My 5th and final source of passive income this March came from options premium. I don't think I'll be discussing options much on the channel, but I am mentioning it since it was a source of passive income for me this month. In short, options are a type of financial contract that give you the right to buy or sell a lot of 100 shares of a particular stock or ETF at a price of your choosing. There's more to it than this, but long story short, by using mostly covered calls on ETFs, I gained $117.60. This month, my passive income is up nearly 6.5 times compared to February. While I expect to continue earning similar amounts in options premiums, looking towards April, I don't expect any other category to be nearly as high as it was in March. But $814.33 isn't my real passive income amount because I made a huge financial mistake that detracted from these gains. This March, I learned a big lesson about being penny wise and pound foolish. I have been contributing most of my paycheck to my 401k in order to max it out earlier in the year. In lieu of direct deposit, I've been making bi-weekly transfers into my checking account before major bills are due. I have autopay set up for my rent payments, but I forgot to make the transfer from savings to checking before March rent was due, and then I got this email. The subject read, Payment Return Notification. I was informed that my e-check for rent had bounced and I was being assessed $140 in fees as a result. Cue the lightning and the thunder. This is pretty much how I felt. I was so embarrassed and I literally had a nightmare about going into overdraft again. I've since rectified the situation, but I also am taking away a few lessons. The first, like I said, is not to be penny wise and pound foolish. I had previously remembered that I needed to make the transfer from my savings account for rent, but I wanted to keep the money in savings for as long as possible so I could get like an extra 5 cents in interest income. By the time rent actually came due, I forgot to make the transfer. That ended up costing me $140. It definitely wasn't worth it. The next lesson is to automate everything when it comes to your finances. If I would have scheduled recurring savings to checking transfers ahead of time for my monthly bills, this issue could have been totally avoided. The final lesson is to revisit your bank account settings. When I created my checking account several years ago, I specifically opted out of overdraft protection. I can't exactly remember my reasoning, but I think I believe that if I didn't have enough money in my checking account to cover a purchase, then I shouldn't be making it. I think I was also concerned that if my account was ever compromised, I wouldn't want to make the matter worse by continuing to cover purchases after the account was already drained. I have now enabled overdraft protection. With the option I chose, if the balance of my checking account is insufficient, the bank will automatically withdraw from my savings account to cover a purchase. I'm not sure what'll work best for me long term though. Let me know in the comments. Do you have overdraft protection? If so, how does yours work? If you don't use it, why not? As always, thanks so much for tuning in. Please like, share, and subscribe to keep getting some of this personal finance content if it resonates with you. Thanks.